Welcome back to the Tech Corner. I'm Rick Ducat, filling in for George Tillis. It's time to discuss a legacy technology company that recently came back into prominence as a leader in the AI race, Oracle. Trading under ticker symbol ORCL, the maker of database software and cloud infrastructure has seen shares surge this year. The stock pushed into fresh all-time highs above 241 this week, more than doubling from its yearly lows around 119 only about 3 months ago. Oracle is a major player in enterprise software and cloud services, but perhaps its biggest revenue-generating segment is its database business, which allows other companies to use Oracle's system for storing, managing, and retrieving large amounts of data. The company's main product is Oracle Database, a cloud database service. Oracle also lays claim to launching the first autonomous database ever in 2017, which automatically performs numerous data management tasks like software upgrades, backups, and other routine maintenance. Notable customers for Oracle include Microsoft, Walmart, Uber, Netflix, and countless others across a broad swath of the overall economy. Oracle's cloud infrastructure business, also known as OCI, faces fierce competition in this rapidly growing field. Other major players in the cloud space include Amazon's AWS, Microsoft's Azure, and IBM. Another major opponent for Oracle in the cloud arena is Salesforce, which is a direct competitor in the enterprise application space. However, Oracle finds itself in a rather unusual position in regard to competition, as their client list contains more than a few of their business rivals. For example, Oracle's database business announced major partnerships with Alphabet's Google and Amazon's AWS in 2024. In other recent news, Oracle's fourth quarter earnings report from June showed its multi-cloud data revenue from Amazon, Google, and Azure grew 115% sequentially. According to its latest guidance, Oracle expects to continue seeing triple-digit revenue growth in that segment for the 2026 fiscal year. The company's co-founder, Larry Ellison, also said cloud infrastructure demand is skyrocketing and that this segment saw 62% year-over-year revenue growth. Another piece of news that captured the market's attention came in January, when Ellison joined a White House ceremony announcing the Stargate Project. This joint venture between Oracle, SoftBank, and OpenAI aims to invest up to $500 billion in AI infrastructure and large-scale data centers in America with a target date of 2029. Oracle's primary role will be the building and supplying of the data centers, while OpenAI manages them. Meanwhile, the Wall Street Journal earlier this month reported that Oracle is offering U.S. federal government agencies a 75% discount on license-based software and analytics. Oracle also is offering another separate, undisclosed discount on its cloud services through November 2025. This follows other tech companies offering discounts, including Salesforce, Adobe, and Elastic. One common misunderstanding about technical analysis is that it attempts to predict future price activity by using trend lines, patterns, candles, or any number of other methods. But this really is not the case at all. Look at Oracle's chart, for example. The 216 level, which is our red line, stands out because price stopped repeatedly before eventually breaking out to the upside. Technical analysis would call an area like this resistance. And the point is not to say whether price will break out or fail at this level. So instead, the goal of technical analysis is to attempt to identify the key inflection points like these where the potential for a significant move is higher to help traders choose strikes or set stop losses or make other trading decisions. Looking further at Oracle's chart action, the stock is making new highs after that breakout above the 216 level. The short-term uptrend is still in play with our white trend line there following along those low points on our chart. However, RSI shows some bearish divergence. Price is making higher closes, RSI is trending downward. However, it's still in the overbought area, which is typically regarded as a sign of strength in trending markets, so a bit of a mixed signal there. And there's not really any other clear warning signs of potential trend change in this name. There's not much in the way of notable volume according to the volume profile study until we reach that same 216 level once again, which happens to line up closely with the 21-day exponential moving average, so this gives us a supportive inflection point to look out for. Similarly, the 190 level shows another volume node and inflection point based on old highs and subsequent lows for price activity, most notably the gap up after the earnings event in June. However, the weekly chart shows price near +2 standard deviation channel resistance, and the weekly RSI is still trending down and approaching that red downward sloping trend line, though it also, once again, is in the overbought area. So, in summary, Oracle's position among cloud computing and AI-related technology seems well established for now. Even though it competes with mega-cap tech names like Microsoft, Amazon, and Alphabet, these same companies also use its database business, making Oracle more of a collaborative competitor. With its subscription model, government contracts, and its leadership position in Project Stargate, Oracle seems entrenched in the tech sector's evolution to further artificial intelligence adoption. That's going to do it for Oracle, but don't miss next week's episode as we dive into the semiconductor company Intel. The beleaguered chipmaker is looking for a rebound with its new CEO, as shares recently hit their lowest level in almost 15 years. Remember to like and subscribe to Schwab Network's YouTube channel for more Tech Corner content. I'm Rick Ducat. Thanks for watching.